Hey guys, Mike here. So Cathie with Ark Invest just did another round of interviews trying to basically explain things to her investors. And, this time, like one of the questions was, I love more than any of them was, basically, have you made mistakes? Is it finally time to admit that? Okay. And so, I know a lot of you guys who watch the channel are invested in her funds or stocks within those funds. So I always like to keep you up to date. And she definitely gives some different answers in these interviews. Also makes some predictions about the economy. And, I'll show you the data at the end of what she's talking about because I think she's absolutely correct, believe it or not, in those predictions. And so if you get anything out of it, hit the like and the subscribe button for me, notifications all, so you get notifications for all of these videos, okay? And so let's go ahead and get into what's going on in the fund and what is affecting the fund right now at this moment.
Let's talk about what's happening in the markets right now and what's happening in the fund, because Cathie, it's been said that you are in the toughest battle of your career right now. Not only are you fighting against the market momentum, you're also trying to hold huge losses and outflows. So I want you to address this for us. What is the message to investors here? Do you think that the street is just getting you wrong, or is it time to concede that mistakes have been made?
So let's put in perspective. You mentioned 60%, which is absolutely right. We have been in a terrible bear market for innovation. Hard to understand, but terrible bear market for innovation. However, if you look from the bottom of the coronavirus to that peak in February of 21, we were up 358%. Why? Because innovation solves problems, right? Now we're down 60%, and we have a whole new set of problems, certainly coming out of Russia and Ukraine. If you look at our strategy over a 5-year period, look at the last 5 years, I'm not quite sure what the numbers are, but they are well above our minimum hurdle rate of return, which is 15% at a compound annual rate. And I think over 3 years, we're closer to 25%. So that helps put our performance into perspective. This is a period, if you believe in innovation, and that innovation does solve problems. We had a preview of that after the COVID crisis, when our strategies in the span of a month, many of the stocks were taken down 75% because either they were burning cash or they had low cash cushions. But guess what? Those were the genomics companies that were going to get us out of the coronavirus. And today, what do we have? We have all kinds of problems, the latest of which is Russia, Ukraine, and all of the commodities coming out of that area, especially hitting Europe. I think we're going to be looking at a lot of demand destruction and substitution into innovation. Electric vehicles as opposed to gas-powered vehicles would be the biggest one. We also have labor shortages all over the place. Again, automation. This is innovation at its best, and it's being turbocharged by this environment as the market is really hitting our stocks. So I think if you were to look at the next 5 years, and if you were to give us that 5-year investment time horizon, we are the closest you'll find to a venture capital fund in the public equity markets. If you were to give us that 5 years, given our expectations for growth in these new technologies, I think we're going to see some spectacular returns.
I think what's really shocking to look at here, guys, is right now, today, currently, they are a little bit below pre-pandemic levels, right? I mean, if you bought at the bottom of the crash and then up to where it's pre-pandemic levels, you're still in the green. But if you didn't, you're in the red. I mean, it's just hard to believe that whole, basically 2020, 2021 is completely wiped out. I mean, rarely do you see a chart like this right here, and it's just kind of astounding in a way. I mean, what's weird though is Tesla's down, the market's it's just bloodbath as I'm recording this. It's about 3:30, market's about to close, and there's Palantir up, right? Palantir's in the green, she just dumped that one. And why? Because Morgan Stanley backed off a bearish call now all of a sudden. I don't know why they did it now. And what was crazy about that call is like Morgan Stanley just basically lowered their price target, if I read it correctly, from like 24 to 16, which is not good, but then, changed the rating. So I guess they wanted to pop the news off that. And I really don't believe that, when she dumps the stock out of her fund, they go up. Some do, some don't. But, if she dumped PayPal, it's still going down. Skills, Open Door, they're still going down. Some people thought it would take the target off of their back. Now, for Palantir, maybe it does, right? We'll see how this plays out. But, there's no doubt, her funds are being targeted. There was an ETF created just to short her funds and her stocks. And so, we'll see how that works out. I am curious. I'd love to ask her, like, for your stocks and your, funds, like, that aren't generating revenue, they're pre-revenue and, losing money like crazy, like, how do you expect them to do over this next 6 to 8 months? I'd love to hear the answer to that question. But, the ones that are, like Tesla, obviously, it generates a boatload of money. And so, they should perform well. And you would think that what's going on with oil prices and all this other stuff going on, that would push people to EV cars, and those stocks would be performing better. But some of them are, some of them aren't. And so now she actually goes into, remember, her degree originally was in economics. Like, she actually knows what she's talking about with economics. Now she goes into that, and I actually agree with almost everything she says right here.
I wanted to ask you about some of the other markers in the market right now, particularly as it relates to the war in Ukraine. Have we seen peak market impact yet? And what should investors be focusing on here?
It's very hard to say if we've seen peak market impact. I know the markets are getting hit today. Typically, the way we see the peak is through the VIX, the volatility index. And it has moved up. It's in the mid-30s. I'm not sure what this morning is. And the shock in 2018 and the one before that got us into the low 40s. Of course, the coronavirus got us to 80. But we're getting close to those cathartic moments in the past. I would be surprised if we do go to the coronavirus levels, because remember, people were expecting a depression. The whole world shut down. This is not that. This is going to cause a lot of problems from a purchasing power point of view. I think the risk of recession has gone up dramatically as purchasing power is dropping dramatically. In the U.S., the consumer saving rate already is down to levels we have not seen since 2013. So that buffer that the stimulus payments created during the crisis, that's gone. And so consumers are probably going to pull back. Sentiment suggests they will. And in some ways they already have. If you average over the last 3 months, this is US, consumption in real terms has been pretty flat.
And that leads us into some of the data she was talking about. Like oil, for example, when it spikes, it actually forces us or leads us into a recession. You can see right there, it spiked, we go into a recession, spikes up, we go into a recession, spikes up, we go into a recession. Down here on the corner, spikes up. This one actually spiked up, came down, put us in a recession, but then you see exactly where we are now, right? Way up there. And so, because what happens is exactly what she was talking about. Is people don't have enough money to spend because they're spending at the gas pump instead of on other things in the stores, going on vacations, all that good stuff, and then cost of goods go up everywhere. And so, looking at what we're facing here, I mean, this is the yield curve. Obviously, she's talked about that as well. I don't think I put that in the interview, but she talked about it. And you can see this always predicts a recession. Whenever the yield curve inverts, I always send this to the members every Friday of where we're at. You can see six to 8 months later, normally we go into a recession. And you see where we're at right now. We're not very far from inverting right there. And then to add more fuel to the fire, and this is Fed's funds rate, right? When we raise interest rates, it leads to a recession as well. You see up, recession, raise it up, recession, raise it up, recession. And then, right here during this time frame is kind of weird. They actually did raise this one up, didn't send us into a recession, raise this one up, went down, put us in a recession. And then the last 2 times we tried to raise the rates, you can see right here, raise them up, go into a recession, and then raise them up and go into a recession, raise them up, go into a recession. And obviously they're going to start raising rates in about, 7 days. And how many rate hikes we're going to have, who knows? But with all of these things going on, if we avoid a recession this year or the beginning of 2023, I will be stunned. I mean, honestly stunned. Like something miraculous had to have happened because, oil prices, I can't believe they're going up this fast. I figured they would break through 115, which is a key level. But when I looked at it last night, I was like shocked. I mean, and the commodities are just skyrocketing again. Nobody even talked about lumber. Lumber is where it was a year ago. Everybody said, "Oh, don't worry about it. It's going to come down." It did. Now it's going right back up. And everything. I mean, nickel, you name it, is just going up. And what worries me is all the manipulation, right? That, like, for example, Russia owns a boatload of gold, so they can manipulate that, right? They can pull the rug out from underneath it. But what worries me is the greed of the traders, right? We've seen they can make, right now it's parabolic, right? And what worries me is these institutions are going to try to drive these things sky high because they don't really care about what happens to you and me and everybody else in the world when it drives food prices up and everything else. They're just trying to make money, bring it in, get the bonuses. That's what worries the heck out of me. And then, of course, what's going to happen? As it's going parabolic, people start fumbling in, and then they get the rug pulled. Because when something goes parabolic, when it drops, okay? And that's the interesting part about it. And so, we'll see how this goes. I agree with some of the stuff you said. Don't agree with some other things you said. But, let me know in the comments what you think, guys. Always like to keep you updated with these things. And so, hopefully we'll get some relief from oil or something. But boy, this is going to be an interesting inflation report this week. Let me tell you, it's going to be very interesting, to say the least. So, hope you guys have a good one. Don't forget to hit the like, subscribe button if you got something out of it. I'll see you tomorrow.